Good morning, everybody. Welcome to the game plan. So here we are again today. And again, we're going to get into the nitty gritty in the charts. And that's what I love to do with you guys is teach, show you levels, and show you things that you might not otherwise see. So follow me over here, guys. Again, welcome to Verified Investing's game plan. All right. First and foremost, let's talk a little bit about the key things. So overnight, we saw decent earnings coming out from a lot of stocks. That has generally propelled the markets higher in the pre-market. And even overnight, in most countries around the world, we saw the markets moving up towards their highs, obviously excluding China and a few other emerging markets. Okay, so the number two thing here I want to talk about, NYCB. Now, a lot of you guys have brought this up to me and said, hey, is it a good buy? All right, so again, let's talk about the news here and let's talk about what we need to know for this potential trading opportunity. So NYCB, we saw it reverse sharp losses before the bell after the news that the embattled regional bank promoted Alessandro Dinello to executive chairman. So if you looked at this, right, overnight, what ended up happening was we saw that the Moody's downgraded them to junk status. And in the after hours last night, the stock collapsed almost another 20%. But this morning, they came out with this news, and again, it reversed those overnight losses to actually go initially green. Now, we will take a look at the chart and see what the chart's telling us. But I will say this, guys, is that when you've traded as long as I have, I've learned certain things. And one of the things I learned, and I learned it just about a year ago in March, was be very careful when banks tumble like this, especially when Jerome Powell just came out on 60 Minutes and said more banks will fail. Okay? So again, he said that. Then you see a chart like this that has collapsed from crazy levels. Like, we're now trading it in the $4 range after this was a, $10, $20, $30 stock at points in history. And again, the way it's collapsing is very similar to Silicon Valley Bank. And in fact, I was in one of those banks and basically I was in it thinking it was a no-brainer. Oh, they'll rescue it, they'll do something, and it'll pop back up. And they halted it and it never reopened. Well, it did reopen, but it reopened literally at less than $1. So I ended up taking like a 99% loss on that trade. And so as many of you guys are saying, oh, maybe they can do this, maybe you can do this, there's always that possibility. But again, I deal in a world of probabilities. And the probabilities are that there are going to be more banks to fail. In other words, even Jerome Powell saying that. And so I personally am not going close to this. Now, if you choose to, that's up to you. But just remember, factor in the potential for a full 99+% loss, or you could make 100%. But to me, again, lose 100% almost, make 100%, I don't know. You have to decide for yourself. Okay, on to the next thing. Uber here posted blowout earnings of 66 cents per share, crushing market expectations of a fall to 16 cents. A rise of 22% in gross bookings also beat estimates. So again, good news from Uber. However, the stock was trading at multi-year highs, vertical. In fact, we are seeing the stock pulling back a little pre-market. Remember, this is a lesson that I try to impress upon you guys over and over again, which is when a stock runs vertical up into earnings, when it's trading at all-time highs going into earnings and it's up X%, what are the probabilities that it can continue to go up on earnings? Now, yesterday there was Eli Lilly, right? We saw Eli Lilly coming out, and they had great earnings. The stock was higher. And remember the channel. In fact, let's go right into the charts and take a look at this, right? So if we flip over to Eli Lilly, here was your Eli Lilly chart. I mean, amazing vertical move. And in yesterday's game plan, what did I say to you guys? I said, listen, there could be a situation here where you open above this channel and it comes right back in. And sure enough, that's exactly what it did. And we saw Eli Lilly pulling back after great earnings and basically closing around the flat line. And again, part of that is just a lot of these companies have gone up so much. Now, the one caveat was Meta, right? Meta was running up vertical into earnings, and it still went up another 20%. But remember, the game we play here is probabilities. And if you looked at 10 companies like this chart, like Meta's chart, like Uber's chart, what you would see is about 8 out of 10 gap up on great earnings and pull back. there's about 2 out of 10 that perform like Meta. And that, again, is what you have to analyze when you're going into positions, going into earnings, where the stocks are already trading in the stratosphere. You have to decide. Another good example of that was Google. Google was trading at all-time highs. It fell on earnings, right? So again, we'll see. It'll be interesting to see when NVIDIA posts earnings in about 2 weeks or so, what they ultimately do, considering where that stock is trading as well. All right, just going back to our post here, Roblox ripping higher here. Take a look at Roblox, is up more than 12% before Wall Street's open after reporting record revenue and issuing strong guidance. So again, interesting chart here. Let's go, in fact, and take a look at the chart of Roblox. Let's see what we have here. I think I have it up here. So first and foremost, look at that move. That's an awesome move on Roblox. Traded basically at the close yesterday around $40. It's trading up just over 10%, like we said, about 12%. Now the kicker here is this. If we go to our daily chart, you can see that if we zoom out on this daily, was this trading at all-time highs, or was this trading towards the lows of the chart? And very clearly, we can see this was your high. Look at the collapse in Roblox. And then interestingly enough, we can actually put in some interesting trend lines to kind of guide us. Okay, so let's do that right now. I love doing this with you guys real time. So what we had was we have a lower trend line right here, right? So that kind of marked an upsloping bottom from here, right? We have pivot to pivot to pivot. Then what we do here, take a look at this. And this is really, really cool. Look at this, guys. All right, so now we've dissected this chart with just 2 simple trend lines. But what do we see here? Check this out, guys. And by the way, is this foolproof? No. But what we saw was a breakout, right? So here's your breakout, broke out, came back to the scene of the crime and consolidated. And when I look at this bigger move up and this move down, what type of pattern are we looking at right there? That's a bullish flag pattern of consolidation after a breakout and a retrace to the scene of the crime. And so again, if you're looking at the differences in charts, and I always say this, and listen, you know, there's always going to be caveats, right? There's going to be like, oh, that one didn't play out that way, that one didn't play. That's always the case because it's a game of probabilities. But when you look at probabilities, was this favored to go up on earnings? Not that you would know the earnings, right? No one knows the earnings, I mean, unless you're an insider. But again, look at that chart pattern going into earnings, and now it's trading up in this range here. Now, again, interestingly enough, you have resistance right up here around $46 a share. Again, would I short that? No, probably not. Not based on how many shorts are already in this, especially where this is trading on the bigger time frame. All right, so again, just wanted to kind of showcase that. Let's go back. Now we have Ford Motor Company, right? Ford jumping more than 4% pre-market. Not a huge move on Ford, but again, solid for Ford. They ended up having better than expected earnings. Now let's do the same thing. Let's dive into the chart here and take a look and see exactly what it's showing us. So here it is, right? So Ford, again, for Ford, by the way, this is actually a pretty good move. I mean, Ford's not a stock that moves up or down 5%, give or take, very often. But again, nice little move here. It looks like yesterday it closed around $12.10. It's trading around $12.76 now. If we flip to the daily chart, let's analyze this, right? So what do we have here? So was this chart trading at 52-week all-time highs, or was it towards the lower end of its range? All right, so let's zoom out. And very clearly, right, you had this pop in 2022, 2021, 2022, and then basically the stock's been just gyrating around the lows, which, what does that tell us? It tells us that expectations were not that lofty. In fact, how many times have I heard lately that, oh, you know, the electric vehicle market's weakening, and we know that from Tesla, you know, car sales are slowing down a little bit, auto loan delinquencies are moving up, et cetera, et cetera. But now let's get into the nitty-gritty. Let's look at the chart. And check this out, guys. If we zoom in here, all right, what type of pattern do you guys see here? Little quiz, pop quiz hotshot for those of you that know the movie that's from. But again, what do we have here? What we have here, look at that. What type of pattern is that? It's an inverse head and shoulders, right? So you have a shoulder here, a head here, and a shoulder over here. Okay, now if we look at the neckline, your neckline is going to be right here, And basically what you're getting on Ford per the move is a breakout up to there. Now again, would I be a buyer after this move up? No, I don't chase. I just don't do it. I've gotten burned way too many times in my life chasing, right? It's again, that FOMO kicks in and you just want to get in because you're like, oh, I'm going to miss out on the next. But it's like, dude, there's so many other trades out there. Wait, be patient, let it do its thing, let it form another pattern. Maybe it forms a bull flag and then I can say to myself, honestly, what's my thesis, right? And remember, every trade that you go into, you should have a thesis behind it. If the thesis is invalidated, it's invalidated. But ultimately, if that thesis is there, at least you have something to stand on other than, oh, I just want to get in because I think it's going to $50 or $100. That's not a thesis. Thinking something doesn't matter. The market couldn't give a crap, frankly, what you or I think, and especially what I think. Like, it doesn't matter. It's about the thesis. So if we are going to open here, what would I do? Well, I love retraces to the scene of the crime. You guys know I've said that word probably 5 times in every game plan because it works. Retrace here, if we pull back right here, which by the way is basically around a gap fill, that's your buying opportunity at least. And again, does that guarantee that it's going to be a winning trade? Nope, it doesn't. But at least you're getting in at a retrace level to a technical thesis-driven point, which is now technical support, and you're putting yourself in the best possible scenario where probabilities are as high as you probably can get it for any single trade, right? So again, very key there. So again, earnings, stock's up. Now again, could it have been down? Sure. But again, probabilities, my friends, that's what we're talking. 7 to 8 times out of every 10, when you have a good chart setup, that's going to be the direction it comes. That's basically as high as you can get probabilities that I've found. There's nothing really that's going to be higher than that. All right, back to the charts here. Let's get back into the action here. See what the next one is. Snapchat, right? Snapchat just gets crushed on earnings. Now, the first thing this made me think is, what the heck with Meta? Right? How does Meta, which both of them are mostly based on advertising, how does Meta do so well and Snapchat does so crappy? The only thing I can come up with is this is the beginning of a slowdown in ad spending. And so what I mean by that is we heard from Google that Google is seeing a slowdown in ad spending. Now we hear from Snapchat, they're seeing a slowdown in ad spending. Meta isn't. Meta is the behemoth in the room. My guess, and again, this is purely a guess, is that people are beginning to, or advertisers are beginning to pull back, but they're not pulling back yet from best of breed, like from Meta, right? From Instagram, from those areas. That will be later on. So the way it works generally, as you start a slowdown, people will cut the kind of the ones that are like not the biggest, right? They'll be like, oh, well, let's, things are slowing down a little for our company, so let's cut back a little here, but let's make sure we keep the best of breed going there. As it slows down more and more, the best of breed also loses out. And so that could be what's going on here. Now, if we look at the chart, let's go to the chart right now and see what the Snapchat chart is showing us. First off, I mean, that is a really crazy drop, right? I saw this yesterday after hours and I was just like, whoa, that is an insane move. Even more insane because initially the price went from 17.5 to 19 before dumping out to $12 where it currently sits. Now, if we go to the daily chart, let's look at this. Where the heck would a level be? Now, all right, so this is an interesting one. So this is one where as a chart, it was more of a 50-50. Now going into earnings, this is 50-50s, by the way. Are those good odds or is that gambling odds? Gambling odds, right? So again, you generally don't play it. But the reason why I would say it was 50-50 is because you did have bullish consolidation here. So again, if you just looked at that, you would say, oh, that's not a bad chart pattern going into earnings. But then you also have to say, wait a minute. This was trading at $7 just in October and November, and now it's at 17? 17? That's over 100% move in just a few months. So when you look and you think about that, it now says, okay, well, you have the bullish pattern here, but it's way too extended in the short term to feel comfortable going into the earnings that there's going to be a high probability move to the upside. Now, let's talk about a retrace. Where are we looking on a retrace that could be technical support today for a buying opportunity? And the one level, and I got to go all the way down here, there's a couple levels. So one is going to be right here. Let me just show you my trend lines as I draw them. So if I draw a trend line at 1137 approximately, look at this. So we have this high pivot from right here where it got rejected. Then we have a gap fill right here where it opened higher and then started that bigger move rally. So it looks actually around 1133, give or take, 1130, 1135. But this would then be a level that I'm now watching as a potential support today. Now, is there a guarantee that it's going to bounce off that support? No, there isn't. It may not. It may go through it. If it goes through it, I need to know as a technician, where's my next support, right? And again, if I did trade this, and at this level, I'm not sure if I would, but I'll see during the live trading room that I do, is I would have to look at how it gets into that level. What are basically the way it gets in, the way price comes to a level is almost as important as the level. And what I mean by that is you get into time counts, you get into 3-bar surges. There's a bunch of ways that price goes into a level where it can increase or decrease the odds of that level working out. So I'll be watching that. But let's just say it goes lower. Let's just say we do go lower. So if we do pierce that level, this would be, to me, the next obvious pivot point to watch, which is around $10.45. Now, why? Well, because we have the secondary pivot here, which, interestingly enough, look at this gap up candle right here where it got rejected, touched it right there. That's telling me there's a level there at around 1046 or 1045. So again, 1135-ish, 1045-ish, those would be my two levels. Lastly, what I do like to do, I do like to zoom out on my time frames and just look and see if there's any upsloping trend lines that could give me a level in that vicinity. And really, it doesn't look like there is. I mean, if we go down here, right, so if we go down to this low here and we just connect kind of through here and here, I don't believe that coexists. You do have a trend line, but it's even lower. So that would give us another level, but it doesn't coincide with any of those other levels. Pivot low, perfectly to this low. That would give us another level at $9. So there are your levels on Snapchat today. All right. Now, let's look at this NYCB chart again. I just want to show you guys the collapse on this thing here. All right, this is during market hours, obviously. In the after hours yesterday, it traded into the threes. Now, I have to check where it is. I mean, this thing moves so quickly. If we flip over, yeah, so it basically came right back in. So you can see, this was your Moody's downgrade last night when after hours was still trading. It basically dropped from, we're talking 420-ish all the way down to 350-ish, 340-ish. Then this morning on that news, it popped to 480, and now it's kind of come back. And it's basically trading, if we look at this, where it closed yesterday right here, you're give or take within approximately where it closed yesterday. But again, like I said, as a trader, once you get burned a bunch of times, I just stay away from it. It's not worth it to me. And again, I got burned on the Silicon Valley. Again, like I said in the beginning of this, I was at that point of saying, oh, it's gotten beaten down. One of these banks I was in was down from like $200 or $150 to like $60. I'm like, oh, it'll be okay. Got in. Literally, they halted it like 10 minutes later. SHIT happens, right? Luckily, in my portfolio, it was only a couple percentage points because I evaluated the risk. And again, I hope anyone who does play this, you just have to evaluate the risk in that way. All right. Couple final charts to go over, guys. I do want to just point out the SMH. I'm continuing to focus on the SMH because it's literally the market to me. NVIDIA is now the market. And I just want to show you guys, you have your topping tail here, and this is your weekly candle, right? So weekly topping tail, this is your weekly candle here. Still, we are below that high. If this closes above the high, then it negates this topping signal on the semiconductors. But one of the things we did see NVIDIA finally have a down day yesterday. The question is, can it have 2 down days in a row? I don't think, not to be joking about it, but it almost seems like it can't. Like, it just cannot do that. All right. Tesla was a good call yesterday, guys. I said, again, this is support down here. You got a nice bounce on Tesla. And then I did promise to go over the K-Web as well as the EWZ. The difference here is very simple. Okay? The K-Web chart is solid. it's a good formation, but it hasn't broken out, right? You have this move up. What kind of pattern is this? Is this a flag pattern? Yeah, a really long flag pattern. One of the longest flag patterns I've ever seen. But has it broken out? This would be your breakout zone, right? Right up here. No, it hasn't. Still in that range, which means it could continue in this range for who knows how long. If we look at the EWZ, the reason why this one's a positive is because if we go to our weekly chart here, look at this. Again, we're talking like going way back, like long term, and look at where this thing's trading. Let me zoom in on that so you can see it a little more closely, okay? And again, what we can see here is that it has broken out. So this has broken out versus the K-Web, which is the China. So this is EWZ, which is Brazil. Brazil has broken out. As long as, honestly, it holds this area right down here, it's fine. If it broke that, that would be a concern. You could come all the way back down here. But again, this is at least a broken out chart versus K-Web is not just yet. And by the way, Alibaba reporting earnings today after 2 good up days. That stock is down just a little bit. Quick 30-second break in the center here to just talk about how awesome iTrust is, guys. And tomorrow I'm going to debut and show you guys my indicator. It's still in the beta formation. We're still doing some changes, but it's pretty darn cool. All right, here's Have
you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo.
All right, guys, here we are. Let's talk a little bit about this chart here. In other words, the one thing I'm going to say, first of all, not much has happened in Bitcoin. It's been dead, but it continues to try to stay right near support. Okay, so we're right in this range. Now, again, as it stays in this range, there's still a possibility it can break out. But again, if the range gets violated to the downside, you're going to very quickly come back to this low end here. So again, watching this 44,000 level, you need a daily close. Remember, intraday doesn't matter to me. They pierce it, they whip it, they do this, they do that. It's where does it get a daily close? If it can get a daily close, then the probabilities increase that it can break out. Same thing here. If it pierces here, no big deal. If it has a daily close below 42, I honestly think we're headed back to that 38 to 38.5 level. All right, next up, guys, let's flip through. Again, I don't have a whole lot of time here. I did want to touch on XRP for you guys. XRP, I know there's a lot of big fans of XRP. I do want to just show a trend line that's a little concerning on XRP right now. It needs to recapture this line. So again, if we look at this, right, pivot low, look at how perfect this trend line is. Right through all these lows, but it has crept below the line. And so again, if you're an XRP fan, you need to see this thing recapture approximately 52 to 53 cents. Hopefully sooner than later. If it doesn't, you could be headed down. Now, honestly, there's not that much downside, right? I mean, you're talking probably like 46 cents of the downside to these lows right here, right? If you just draw a flat line right through there. But just be aware, in the XRP chart, you do want it to recapture 52 cents to 53 cents very quickly. All right, looking at gold, guys. Gold had an up day yesterday. It continues to hover basically right underneath the highs. I continue to like it. I'm not going to spend a lot of time on this because, again, guys, nothing's really changed from yesterday, and I don't have a lot of time left. Yesterday, we talked about palladium, so today we'll do platinum. Let's take a look at platinum here. This is your monthly chart on platinum, guys. Again, you can see the craziness. What I do want to do is I just want to draw a couple trend lines for you guys. Number one, we have a down-sloping trend line here. That's your breakout zone. Number two, we have a flat bottom right here. Let me grab a trend line again and drag that through right there. This is your zone right now on the chart of platinum. So again, platinum's going to have support around 775, give or take. The upside breakout is when you get, basically it looks to me about 1050 or higher. You get above 1050 on this, you then start a bigger breakout from this wedge pattern. But again, you don't want to see it violate 770. If it gets below 770, could go as low as this pivot from COVID, which was around 600, high 500s. And again, the goal here would be to see a breakout essentially above $1,050 on that front. All right, last couple charts here. here, guys, before I have to run to my trading floor. Remember the oil chart here, guys. Let's go to the oil chart real quick. Remember, we talked about this move down. We have this upsloping trend line, and basically it did exactly what I talked about with you guys here. Notice there, to there, to there. Multiple down days, hits right here, and then gets a bounce. Now, again, this bounce may not be a big bounce. It's very possible as it kind of comes up, it could curl back down. We have to watch it very closely. The no-brainer was to get a little bounce here. That was the high probability. It's now done that. The question then is, does that move continue to get extended? Lastly, and most importantly, well, not most importantly, take a look here, guys. Again, we have our chart of natural gas. And again, natural gas did what I said I was waiting for it to do to be a buyer. So if we zoom in here, guys, just a little bit, if I bring this over here so you guys can see it, it pierced the $2 level. I did add to my UNG. So patience paid here, at least, right? Again, I was very careful, very disciplined. I said when it pierces $2, and by the way, does it mean that it's the bottom? No, it doesn't. It may still go lower. There's levels at like 190, 185, a bunch of levels, even down to 160. But at least I know I got it on the pierce of the even number, and it is bouncing a little bit today. Let's see if this can muster a good reversal candle today and rock and roll. All right, guys, back to center screen here. You guys rock as always. I got to get going, man. I swear, I got to do longer ones like this. Maybe I'll work something else in with some different charts. But either way, you guys continue to blow my mind with your support, and I do thank you so much for that. You guys have a great rest of your day. We'll throw the soccer ball today. Have a good one.